Welcome back to the Dividend Diplomats YouTube channel. We are pumped up. We are ready to go. Man, this first week of May has been exciting. So we're going to bring to you our second ever Market Talk Investing News segment. So everybody, get ready, get hyped. We have three, and if we have time, we're going to sneak in a fourth story to talk to all of you. Get excited.
Grab your beer, grab your coffee, grab your loved one, guys. Smash that subscribe button. Give Bert and I a thumbs up. This week, the first week of May, May 1st, finally, we have entered May. Again, May, go away. Let's go, guys, because this stock market is down over the last few days. We're recording this on, 9:45 here at night, May 4th. May the 4th be with you. May the dividends be with you. And man, this has been a wild week, turbulent. I feel like I'm in, 20,000 feet in the air going through a, storm right now.
I know it's crazy because, the first story, we can jump right into it because it's been what's driven the entire week. The Federal Reserve, was it on Wednesday, Lanny? I can't even remember. It was Wednesday. They announced another 25 basis point % increase, which was expected, everybody. People weren't focusing on the actual increase. What they were focusing on was the narrative that was coming from the Fed. That's what people wanted to see. Were there changes in their tone, changes in the language? But first, let's talk about that increase, 25 basis
Don't
points.
go reading between the lines.
Yeah, that's pretty much what everybody's saying right now. We'll get to that in story number 2 when we talk about that. The Fed funds target is now between 5% and 5.25%. It's the highest level since I think it's August 2007, right before the global financial crisis. So it's always a interesting thing that's the point that they're comparing it to on the highest point of the spectrum. But what else kind of happened with this announcement, Lanny?
Oh, well, as this was being announced, the markets reacted first okay, and then everything kind of went down south to finish off Wednesday, and that carried into the 4th. Because again, remember earlier this week we had First Republic Bank fail, and then JP Morgan won the bid to acquire the assets for a cool 10 billion, aka drop in the bucket for JP Morgan to pick up a big asset such as First Republic. But then you got more news, more fear, more contagion fears about the regional community bank space, specifically right now. Again, we say right now on the West Coast from all the short sellers, hedge fund managers, and again, news publications striking the fear in consumers, talking about PacWest, Western Alliance, Zions, Key, many other banks right now are getting pummeled by the news of fear right now. And
yeah,
I'm getting really tired of it, to be honest.
No, and so am I. That was actually story number 2 was the bank contagion, but they were just so interlinked together. That's what it is. And that's been what's frustrating. The banking sector just cannot get their bleep together, for the better terms. Every time you think that they're turning the corner, things are getting better, something spooks the market and another big bank goes down. And then from there, everyone else starts looking at it's kind of like, what is it, Goldberg? Who's next? Who's the next bank that's going to fall? And it just keeps going. And what's unique right now, when First Republic was acquired by JP Morgan, Jamie Dimon declared this phase is over. This phase of the crisis is over. What took down Silicon Valley, First Republic, that's over. But we're entering in the new phase where it's which regional bank is going to go next, and now that the call reports are filed, now that the financials are filed from the quarterly, you're kind of left in the dark about what's happening with deposits at these institutions until the next line of reports come up next. So you don't know. That's kind of the scary thing.
You don't know, but all you can do is use the information that you have, use your own research, and make financial decisions, guys. So again, yeah, Bert already talked about it. The Federal Reserve raised 25 basis points. The banking industry, again, we're talking, it's hitting the biggest banks to the smallest banks. Bert and I, you own what? Premier Financial,
yeah.
You own Fulton Bank. Name some other smaller banks.
Fulton, LCMB is one that we've talked about before too. What's funny with Premier is I think we wrote about it. We talked about it at the beginning of March before this entire thing started. It was a buy at 5%. Their yield's at 7.5% right now. They're down $10. Just how crazy this environment is. Fulton's in the low teens. I own Huntington, which isn't small, but it's larger. Huntington is down into the single digits. KeyBank's in the single digits. We own a lot of banks. If you want to see them, I'll go to our website. But you're right, Lanny. We own a lot of banks, so we're getting impacted by this, and we're even just kind of trying to dissect what's happening on a daily basis. Has this changed your thoughts at all, Lanny, from the investing standpoint with banks?
I think with banks, read the numbers, read their financial reports. Did they grow deposits? Did they shrink deposits? What's their uninsured deposits
Mhm.
as a component to total deposits? What's their unrealized loss on investments as a component of capital or equity? What's their contingency funding plans? Just look at a few criteria. I'm not asking you to read a 180-page 10Q. Read just their balance sheet, really the balance sheet, maybe the securities and fair value footnote,
Yep.
and you'll start to gain a better understanding if you're investing individually in banks. But that's also another segue into just another topic of ETF investing. I mean, right now you could be a great time to start really picking up and averaging down cost basis in ETFs. But again, and it's not like the entire stock market has just tumbled 25%. The S&P 500 is still up between 6 and 7% at the time of this video this year.
Yeah, that's right. It's something that's very unique in the banking sector, and the Fed's announcement and the banks are always going to be intertwined from there. Another tip, if you're looking for a fast way to find this information too without digging through this, a lot of banks' earnings releases from the first quarter, their earnings presentations, their transcripts were talked about this all the time. So you can go to Seeking Alpha, you can find all of this information available. They'll probably have a slide that says, here's our funding, here's what we're concerned about, here's what our commercial real estate portfolio is doing, because that's the other hot topic right now, is how vacant commercial office buildings are and how that's impacting a lot of banks that may have these massive CRE loans. So yeah, a lot of it's out there between the 10Qs, earnings releases, earnings presentations, and transcripts. It's out there, to your point, Lanny. It was a great call out.
No. So again, what are we doing during this right now? I mean, Bert's investing, I'm investing. But Bert, that was not the only other big news. Again, Fed, the banking industry. What about streaming?
Freaking Paramount Global, ticker symbol PARA. I really don't have much good things to say about Paramount Global this week. It was like we woke up to down in the pre-market, and Landy and I were texting like, "Oh, another terrible day for Paramount." Then about 30 minutes later, we looked into what happened at Paramount, and my God, did they slash their dividend? I don't know. They didn't just choke slam it. They then picked it up, they tombstoned it, and then they went from there. They picked it up and tombstoned it again, and then on top of that, they tombstoned it a third time. That's what
they almost overdosed on Oxy, aka Occidental Petroleum, when they reduced it down to a penny.
Yeah,
But at least Paramount kept it at 5 cents a share per quarter, down from 24 cents. So they literally reduced their dividend by 79%.
and what drove it? Revenues dipped, double-digit slide in TV revenue. The interesting thing was they had a net loss. And what drove it was they had a $1.67 billion charge for programs taking in there. So their content, the thing that Paramount Global is based off of, resulted in a $1.7 billion charge, which sank earnings. Cash flows for the company as a whole are down with that, revenues down. So of course there's no room to pay out that dividend. They don't even have a payout ratio. I think you made that joke before we filmed this, Laney. They don't have a payout ratio. It's NA right now.
Yeah, and I mean, I owned a lot of Paramount. I lost about 140, give or take a few dollars in poor dividend income. Bert, did you own Paramount?
Yeah, I do. I didn't lose that much, but we owned it, so it sucks. Like, it just sucks. I have nothing more to say. It just wasn't the best week for Paramount or our bank stocks, Laney.
No, it wasn't. But on some different news, this could be a little next conversation at topic number 4. Let's go talk about your dividend king, Bert.
Yeah, the Johnson & Johnson spinoff had its IPO, so we're going to end on a positive note. Kenview, ticker symbol KVUE. I like that. The name's starting to grow on me. The consumer staples spinoff from Johnson & Johnson. They finally IPO'd this week, and it was actually the day we're recording, 5/4. They were priced at $22 per share, surged 22%. So it was a nice IPO. They said the largest IPO since 2021. So maybe that's what the market needed. Maybe that's what the IPO market needed. Some of these things to start getting some new companies, some new blood into the market at some attractive valuations.
And Bert, do you have it currently? Did you receive the stock yet for Kenview, or
No, I think that's coming. I think they started with the IPO and then it's going to turn into the full spin-off after. I can't confirm it. If somebody wants to share in the comment section the exact details on it, that'd be great to know if you know. But I logged into my brokerage before this. I don't see Kenview in there, so I don't have it as of today.
Same. And
So,
and again, last little cherry on top, another bonus as a fifth item. Apple's, savings account brought in over $1 billion. I am sure everybody read that in 4 days.
yeah.
So I'm sure it's could be multi-billion right now that the big player is able to bring in. And they just announced a very small dividend increase of just over 4% this week.
Oh, interesting. So, I mean, yeah, that's interesting. I didn't realize they announced the dividend. That one just kind of snuck in there, but the savings account's great news. We talked about how that could be a huge part of their platform. People, it's just going to keep tying you into the Apple lifeblood more. They're going to be able to offer people, and it's fascinating that within 4 days they had over $1 billion. That's all. Do you know how many banks would kill for $1 billion in deposits right now, Lanny?
I could name a few that probably aren't in existence anymore.
Yes. And a lot of them that are kicking that down. So everybody, those are kind of the stories we wanted to cover this week. Let us know what your thoughts are with the investing topics. Again, Fed increased its rates. Banking sector is just getting Hogan leg dropped. I'm not even gonna Paramount, whatever. Kenview had its IPO, and then Apple, small dividend increase, but large savings account product.
I did not expect this from Paramount, especially after the resounding success of Top Gun.
No, at least AT&T warned us it was coming. AT&T kind of eased us into their dividend cut. They told us. Paramount was just like, let's just rip the Band-Aid off.
Guys, what was your favorite big news of the week during this first week of May? Are you investing? What are you buying? What are you selling? What are you looking to do more of right now during this volatile market? Let us know in the comments below.
If you haven't already, subscribe to our channel. Give this video a thumbs up. And remember, if you're not with us, you're against us.
That was Bert and Lanny from the Dividend Diplomats, over and out.